Imagine a footballer that has been ignored totally, just say totally ignored. Then all of a sudden, that footballer begins to score two goals, three goals, one goals. Before the season end, that footballer don score close to 30 plus goal. Immediately, endorsement came in. Nike, Adidas came in for that players. And all of a sudden, everybody started fanzing the player. All of a sudden, everybody started giving the player special attention. A player that has been ignored is now given attention due to what him scoring plenty goals. And again, many clubs started coming to want to sign that player. All of a sudden, that is the story of what happened to Snowflake. Snowflake. All of a sudden, Snowflake increases 30% in the stock market. Exploded. Boom. So, for those of you that don't know what Snowflake is a data company that what they call store data, analyze data, or other companies use their resources or their power resources or their computing power in order to analyze their own data and whatsoever you have it, the case you may have it. So they're a data company and they're one of the biggest in the world. You see, their share price was snow diving in the previous days, snow diving in the previous day. All of a sudden, 30% increase, boom, it shocked Wall Street. Boom, it shocked Wall Street. So what are the so what happened? What happened? Number one, Snowflake beat what they call market expectation. They beat Wall Street expectation. Wall Street predicted that earning before that they released the earning report. Wall Street predicted it to a specific number. However, the business shocked Wall Street. Anytime that news news is bad, stock price news is bad, stock price drops. Once it is good, stock price goes up. But what is what when once it is the earnings is beyond the market expectation, it explode. So for example, Wall Street can predict that a particular company's earning report will not be good, which can make a stock price to fall, a share price to fall. Wall Street can predict that a particular earnings can be good, and once the earning report comes out, the stock price rises. The same Wall Street can predict that this company will do good, and when the earning comes in, it supersede Wall Street prediction. It can make the stock price explode. That is one reason. Number two reason is that Snowflake gave their investors, which position them, a belief that their business will perform well in the future. So Wall Street doesn't care about today. People bet on future growth of a company. They bet on the future earnings of the company, how the company will do good tomorrow. And of course, Snowflake's management gave investor confidence that their business will do good. Will do good. And of course, the AI hype around, you know, them using AI to analyze data and do whatsoever around them being a cloud, because they're a cloud company that stores data and that they use AI now to analyze data and whatsoever. So companies like banks, Amazon, Netflix, and the rest pay them a lot of money in order to use their computing resource and so forth. So the AI hype also help to boost, the company um, performance performance. Then the next thing that makes that the stocks to explode is also, of course, the AWS partnership. Amazon web services. Don't forget, Amazon is the biggest cloud company in the world. Imagine AI plus cloud. You can get the OGs, right? So the AI hype, what we should get to know is that that partnership secured their tomorrow, their future earnings of tomorrow. That partnership alone, the money that will be coming into Snowflakes, is going to be massive. That's why you see the price. The price was around 170 something few days ago, 176, 170 something before it goes up to around 236, which they are even speculating that it's going to go to 300 or whatsoever. But when everything goes down, of course, it's going to cool off. The market is going to cool off and so on like that. So, what beginners should learn is that if they position themselves before a company release their earning, that's and expect that the earning of the company should be good or should be better or they should be shocked, they can buy into those stocks believing of for the future growth of the company. Now, it's not about social hypes. It's about, of course, the expectation of what the company is doing, their partnership deals, are their product and service still in demand, and what is the prediction from Wall Street, and will they be able to beat that? And of course, even without the AWS partnership, which was, I think, to me, was a major factor, you know, that helps their earning. Even without the AWS partnership, they still have a lot of businesses. They still have a lot of businesses that will generate revenue because big companies, big cloud companies in the world are using their services. They're using their services. Imagine them using AI and data computing in order to make sure that companies analyze data and analyze the data appropriately. Use them also to use the AI futures in order for them to generate their own output. So this is massive. It's massive for snowflakes. It's massive for snowflakes. So if you want to invest in other companies, is most importantly, you should understand what the company is doing, their partnership, um, their revenue projection, and of course, you have to also be very, very, very vigilant because not all companies will perform the way snowflakes perform. Not all companies will beat the prediction of Wall Street.